So in continuation to what I was saying, let me put them side by side. So Simon, like I was saying, because you're the one that asked that question, and I was saying that a trader that is trade lasted 6 hours and a trader that a trade lasted 1 hour. That doesn't mean because the trade lasted 1 hour, 1 week, sorry,
Mhm.
that's going to make higher profits than a trader that a trade lasted 6 hours. So let me explain something. Let me explain the first reason why it might not be the same outcome, might not be the same profit, because now this same candle here that is giving you 10 pips and this one, they are of the same size though, but because this one took 1 week to form, it's going to like, the how will I put it, the kind of space is going to take in terms of price is going to be bigger. Does that make sense?
What do you mean? Like,
Like now let's say there's a drum, we have a drum here, right? Hmm?
yeah.
And then you are filling it with water. We have two drums, same size, same height. We are filling both with water. This one
Mm-hmm.
now, what you are going to fill in this drum within 1 week is going to be obviously more than what you are going to fill with this drum with obviously 6 hours. What I'm trying to say that the weight which this one will now result to is going to be much bigger than the weight of this one you filled with 6 hours. Does that make sense?
Yeah.
So now the weight this candle is carrying, because it's formed in 1 week, is why it's resulting, is why the candle is worth 100 pips compared to this one that's formed in 6 hours that is worth 10 pips. Does that make sense?
Yeah.
Larry,
You just said,
I just said what? Does that make sense? That's what I'm asking you.
and yes, it makes sense.
No, like, be serious. If you don't
Yeah, it
understand,
makes sense.
let me go over it again.
We have go back again, please.
Okay, now let me just use delivery price now. Can you guys see where my cursor is? This
Yes.
11,900,
The 11,900. Yeah.
12,000, 12,100, abi?
Yes.
You guys see it, oh, you see the price. Let me go to a 1 hour time frame. As I zoom out, what are you seeing? You are seeing
1240.
1204, 12040,
Yeah.
1206. When I was in this
Yeah.
higher time frame, you didn't see all those ones, abi? Are you see? Do you understand? Do you understand what I'm saying?
Yeah.
Yes.
So when you depend on the time frame you are on, some certain things are going to be filtered out. Do you grab?
Yeah.
Let me show you. Let me not assume that you get. Let me show you with chart. This candle now. Let's use this recent candle that is here. Let me mark it. This candle that is here. This is a candle that formed in 1 day. Hmm? Let me point it out so that you guys will see the volume. It's the power of this candle. Let me use that word. You can see this red line here, 5311.0, abi?
Yes.
Yeah.
You can see this, the bottom, 5138, abi? This one and this one.
Yeah.
Hmm? So now let me go to a 1 hour time frame. You see the amount of candles that formed to form that one particular candle on the daily time frame? Do you follow?
Yeah.
Yeah, there are lots more.
There are a lot more. That is one. and the trader that took a trade, let's say the trader that took a trade from here, from after the close of this candle, are you guys following?
I'm following you.
Yes.
So the trader that took a trade that lasted for 6 hours, let's say the trader saw the entry on the 1 hour time frame, and the trader say, okay, it's time for me to buy. Let's say at the close of this big candle here, the trader took a trade and the trader put stop loss. This red part you are seeing is an area of not good. What that means is that if the trade you say, okay, it stop loss is what is protecting your money and your trade, in the sense that you don't want to take a trade whereby all your whole capital is going to wipe out. So you want to be risking a certain amount on each trade you are going to be taking. Are you guys following?
Yes.
So now this is just like, it's just like you narrow down to know what you're going to be risking. So now if you this middle point is entry, then this anywhere you put this one is going to be where your intended stop loss price is going to be. You follow?
What do you say?
Okay.
Like this place where the cursor is your entry.
Okay.
Then here, this doesn't matter, like
Your
this is
stop loss.
just where your
Okay,
stop,
okay.
like this is just like the trading soft this the future that comes with this trading software. You grab, it's just helping you to, it's helping you to determine where the price is. Do you follow?
Okay.
Yes.
So now, like, your risk to reward has to be more than what you are risking. Like, if you are risking 1 naira now, you should be expecting to make minimum 2 naira or 3 naira back from each trade. You grab,
Yeah.
your risk cannot be more than what you are getting, cannot be more than the reward. Like now, this is, as you can see, risk to reward ratio 2.4. What that means is that if I'm risking 1 naira, I'm expecting 2.4 naira back from where this one is. So if I just say, okay, I want it to be a little bit higher, like here, if you see, I'm risking 1 naira, I'm getting 4.28 naira back.
Okay.
Do you follow?
Yeah.
It's just a picture showing you like what you are risking, everything. Like, it's helping you instead of you calculating it yourself. Let's say this whole thing I've not
Mm.
yet played out. It's just helping you to project your risk to reward ratio you're going to be getting back. Does that make sense?
Yeah.
That's what this thing, this called long position. So now, like I was saying about the trader that lasted 6 hours, with the time frame the trader is using, is it took a buy from here, and then, so now if you, and the target is here and then the stop loss is here. So now, because the trader is using a smaller time frame, if you notice, this is 5177.7, that is where the entry price at which the trader clicked buy, and then 5146.7 is where the trader puts stop loss. That is, once price will cross this level, I want my trade to, like, I want to be the trade, my, once price hit this level, I
You want
want to
to
be out
exit
of the
the
trade,
trade,
like,
Abby?
yeah.
Exit the trade, Abby?
Yeah, the thing will exit you automatically as it touches that price, without, even if you're not present on the
Okay.
chart. So now let's go
Okay.
back to that daily now. Can you still see that picture here? Huh?
Mm, yeah. Okay. Okay.
Can you still see that stuff that was telling you about your risk?
Yes.
Where is it?
It's not between that. Yeah, I think I have the price.
Not the price, like that stuff I was saying, that was giving,
The
that was
line.
telling your risk to reward, that stuff, that's blue and red stuff.
That was showing you. No, it's not here now.
What does that mean? That the higher your time frame, it makes, how would I say this now? The higher time the higher the time frame, the more it makes like the price bigger in terms of, does that make sense?
Wait. Is the higher your time frame, the more it makes the risks. What do you say?
The
The
higher the time
price.
frame, the more it makes the price bigger. Like now,
Yeah, yeah, yeah. I understand that
you
part.
should grab now, like if you are taking this trade from here now, the price, um not like the price difference from year to year is a lot bigger when it's on a when you are taking that same when you are seeing it on a smaller time frame. Does that make sense?
Okay, I think I understand what you're saying. Yeah.
Please, I'm not too good, so you should be, if you know this is, can you see how big it is here when compared to when you are using, does the picture make sense?
Yeah. I get what you're saying.
Like you can see the gap that it is from year to year compared
Yeah.
to, this is just one
The
whole
day.
candle.
Yeah.
This is just one whole candle from year to year. I don't know, I'm trying to like make it make sense so that you guys will follow. Are you guys following?
Yeah.
Yes.
So now let's go back to that trader that took this trade from here. Because the stop is a little bit small, the trader can like take more risk compared to this person that the stop is big. So you figure out how to like minimize the risk this to fit this whole stop. Does that make sense?
That's it. The trader is trading like within the trade.
On a bigger time frame. Does that make
Yeah.
sense?
Yes.
Please, I hope it does. I'm trying to think of an example now to explain it. So I've talked about different type of traders. So starting off, I think people are going to start off as a scalper because you are afraid, you are emotion, everything is going to be running.
Because when you were saying, I was wondering that honestly, to me, it's still like the safest thing, kind of just, but because the profit is going to just be low.
And the profit is going to be low because number one, as you are starting off now, you are not yet experienced with opening hundreds of position at the same time, opening 50 position at the same time. So if you don't open that much, you can't like, your profits can't be much. That's just the thing about scalping. When you open a trade now, I'm not you can open a trade of you can open just one that will be the same amount, be the same amount as opening 100 o. Does that follow?
I don't
Hello.
follow that part.
Like you can just open one trade that will be the same. Let's say you have 0 points. Let's say you open a trade of 0.01, you open 100 of it. That is still equal to opening just one lot with one lot size. The lot size is what matters. Do you grab?
Yeah.
So 0.01 times 100, I think it should still be 1.
0.01 times 100.
That's 1.
Yeah.
So that, let's say now you open, like I was talking about with leverage and all, you open a trade of 0.01 100 times, and you opening just one trade using one lot size is the same thing. Do you grab?
Yeah. I get.
But now as a scalper and with experience, you're not going to open this 0.01 all at once. Then open it gradually, because if you open it all at once, is your with your little capital, your account can go into can just blow at once. Do you grab?
Yeah.
So sometimes they tend to wait. Let's say they'll open like 10. Once that 10 is giving them a certain amount of profit, that profit will now back up the remaining capital they have. They can now open more position. Do you grab?
I got.
So the types of traders that we have: scalpers, day traders, swing traders. Alright, as time goes on, I should talk about pips now. So when I'm talking about pips, I like to use gold to explain it because it's much easier and safer. So Simon, you're talking about gold. This is gold. This is the current price of gold. $3,310, and it's still moving. It's not fixed.
Where?
$3,310 per 194, Abi.
Yeah, this one right here. This blue
The blue
side.
one.
Yes, that's like it's still moving right now. Because I'm in
How
the
about the
window.
red? The red and the gray. What are those values?
Eh?
The one in red and the one in gray. What are those values?
Which one? It's because of the drawing I have on my chart. That's why you're seeing all these other ones.
Oh, okay.
I'm coming to send a message to somebody. See this. So for gold, for talking about pips, let's say you will find it different across other currency, but this software already make it easier for us to know what pips are. As I click on it, you will see stop 9.424. Do you see that?
Yeah.
For gold, what that means is 94 pips. But now let me go to another currency. Let me go to currency. What do you see here? Stop 20.0. Abi?
Yeah.
What that means is 20 pips. Did anything come to your mind that why is this like this?
What's that? Is it the colors?
Not call like
The
why?
pips.
Yes, the pip. I'm talking about pips now.
This is a 5 minutes trade now.
But yeah, this is a 5 minute time frame, not trade time frame.
Sorry, time frame.
Okay, how will I put it now? Like I said at the beginning, we are trading price, right?
Yeah.
So now pips is what will help you. Pips with lot size is what will tell you what you are going to risk on each trade you are taking. Does that make sense?
As in like the amount you're risking or what?
Yes, like pips will tell you, pips and lot size is what you use to calculate the amount you are willing or you want to risk on each trade. Let's say now gold now is let's say 3,000. And then you say, okay, I want my stop to be at 290, and then I want my target to be at 320, or let's say 350. So now this is the price you want to enter the market with, and then this is the price you want to use as your stop loss, and this is where you aim at, which is your target. So now from 3,000 to 290 for gold, yeah, is
Yeah.
equivalent to 100 pips.
From 3,000 to 2,990 is 100 pips.
Yes, and that is very heavy. Like that is not a small thing, because the average movement of currency is between 50 to 100 pips, but gold can move 1,000. I like gold is, let me just say gold is much volatile
Than other ones.
than other currencies. That's gold, US 30, US 100, they are much volatile. That's why as a beginner some mentors will say, oh, don't go to gold there till you know what you are doing, those kind of talk.
But you're already carrying us to good.
Because it's easier for you to understand in pips. I'm not saying you should go and trade it. I'm saying if you want to understand. Like for me too, it's easier for me to explain it to
Okay,
explain
with
pips
gold.
with gold. Yes, because for gold now, yeah, like I said, 100 pips. This same 301 is equivalent to 10 pips in gold. And normal currency, before normal currency will give you 10 pips, you like it will take a lot of movement to give you 10 pips. Does that make sense?
Yes.
This is currency. From year to year is 10 pips in currency, which is from 1.32614 to
1.2.
1.32714.
That's 10 pips.
That's 10 pips in currency. Can you see it? You can see it here. 10 pips. Can you see the 10?
Yes.
Where?
So this is currency.
Okay, okay.
1.32614 to 1.32714. That is 10 pips in currency. Let's go back to gold now. Let's go back to gold. Gold now, yeah, is going to just be, there's nothing like 10 pips sef. For you to see 10 pips is at the mercy of God. Like the way it move, it's crazy. For gold now, this is 10 pips. This 3284.69 to 3285.69. That is 10 pips. Can you guys spot the difference?
No.
Can't you see how small it is
Now I can see how small it is compared to the
compared
normal
to the
currency.
currency? Do you follow now? You
Yeah.
can see how the thing, that's why I like trade, because the volatility. Any small push like
Change.
this is going to result in either a massive gain or a massive cry. So you choose your own. So do you follow?
Yes. So don't trade gold yet.
No, so you have experience, that's what I would say. So you can do 1 plus 1 in the charts. You can, you master it. Like when you are mastering something, you marry it, you spend time with it. It's something your heart can carry. You lose money with it, you will still enjoy with it. So it's, everything is all boils down to your own personal preference. If you're that kind of person that cannot be waiting, imagine the minutes you have to wait from year to year for it to give you that 10 pips, compared to when you're on gold. It's just like a twinkle of an eye, bang bang, you have seen that 10 pips. Does that make sense?
Tickle of an eye. You have lost that 10 pips.
With a twinkle of an eye, you can see goodie against you. So that is how it is. I'm coming, I'm messaging someone.
Sorry. Cruz, you are still recording it.
Yeah, sure.
Okay.
So like, it will be on my channel. You can
I'll get
subscribe.
what you want to
You can
do.
help me promote it anyhow you want to do it. It's uncensored. Any word I say is going there direct. I don't have time to edit.
What's the name of the channel?
I am Kelvin Cruz now, CNF.
Cruz Nation.
I think, yeah, Cruz Nation Family, that's just the full meaning. So what is there? But you guys, like, truthfully, you guys are following. You guys are not just nodding your heads in the back of the screen and saying, "Let this guy finish and go." Have you?
No, so far I'm getting it. Although I feel like there are still some things that maybe you might need to expand on. Like,
See, the thing is, I feel like some of the things is when you start like practicing it, you understand it more.
Yeah,
yeah,
you when you start practicing now, like, there's so these are not, they are related to trading, but like they are not the main. What that means is this one are just basic stuff that you should know as a trader.
yeah,
Like now, as a trader, there are a lot of things that affect the market. There's uh, fundamental in the sense that there are some, the way you see Arise News in our own Nigeria station, that's the way there are actual news in each country, the way each of those news are being reported, that is how they affect the market one way or another. Do you grab? So you don't just see price be moving anyhow or moving randomly or moving in one direction. Eventually it's going to break
Go
down,
down.
rest small, and then it's going to continue, or but sha, there's a time for everything. So I've talked about pips and
Sorry, Cruz, what's the name of this app again?
which
trading
app?
view.
This trading view. So you can download it on your laptop, you can also have it on your phone, there's nothing wrong.
Is it on like Microsoft Store?
No, just search trading view on your web browser or trading view download, any one of them.
You know, give me a virus.
Oga, you just enter UK, you talk about virus, you go dey download nonsense for anime, you dey tell me, if I knock your head, tell me virus. And now you wan do virus, only virus.
You show me www.plus500.com. Okay, I've seen it.
I tire for you, this boy. See, what? Okay, that's all. Let me give you guys a glimpse of the main.
Ah, what's the meaning of this one now?
What are?
Error in passing the app package.
So I'm sharing my entire screen now. I want to open a slide. I don't know why. So let me just talk about structure. Like, as you guys can see these charts now, you guys can see at first it was going up like this. Then it got here, say okay, I'm no longer going up. It started coming down. What comes to your mind when you see something like this? Any any thoughts or any imagination or any assumption?
Nigerian
Wahala,
currency.
Eh? No, like,
wahala.
you can say wahala, but in forex you can profit from either direction. Either it's going up or is coming down, you can profit from both ways. It doesn't matter what direction it's going to.
Mm.
Yeah, it's not and the same way you can buy, that's also the same way you can sell. You follow.
Yeah.
So it's not like I said, we're trading price, we're not holding the assets. So you buy is the same way you can the same way you can sell. So now I wanted to open
Okay,
it.
this is 5 minutes trade.
5 minute time frame, not 5 minutes trade. How many
Sorry,
times like
so,
this?
sorry, sorry,
This is a
sorry.
5 minutes time frame. So now if I'm to open a higher time frame, this whole area here,
It look like only it's looking small.
it will look like it will just be one candle. Depending on the time frame I open, this whole area, this whole downtrend you are seeing can be one candle on a higher
Then
time
that's
frame.
the reason why it's looking much because of the time frame.
Yeah, because the time frame is giving you another, like now someone that is trading off a smaller time frame or a scalper, this all this structure here, all this structure here, this one, that is where they'll be plotting their entries from and profiting from it. All this structure, all this area I'm aligning now, they are called break of structure. Are you guys see there? Hello? Hello?